I think it's fear of slowing economic growth ahead of us. Look, China's the biggest buyer of hard commodities. They're by far the biggest importer of oil. They're building big strategic storage reserves for all commodities, including oil. And so in China, you saw us cut interest rates recently. People are fearful of Chinese economic growth. If they slow down, that marginal buyer of oil and iron ore and copper is going to pull back a little bit. So oil prices are still around $80. I don't think they're in a bad place, but I think fear about economic growth and specifically fear about China is probably the cause of that.
Hey, Chris, in case maybe you didn't notice out there in Montana, but this is an election year. What is the energy industry? What do you and your energy industry pals, what do you think about, Republican versus a Democratic administration here as it relates to your industry?
Look, I've been outspoken on my visits to Washington that the efforts of the current administration to make it harder to get a drilling permit or to get a pipeline or to drill on these lands, what does that do in effect? It just means we produce a little less oil and natural gas. It doesn't change demand at all. So it just pushes prices up. So look, our industry's been at record profitability. That's great for me. That's great for our industry, but that's not great for our country. If you have higher prices, it just makes people's lives a little bit tougher. And nothing the government does really impacts demand. Demand for hydrocarbons has grown at 1.6% compound annual growth rate for 50 years, a little faster than that in the last decade or two. So the presidents are not going to impact demand, but they are going to impact how much of that's produced in the United States and how much of that's produced overseas.
So here's my thing with it I don't quite understand, is that oil production in the U.S. is at a record high. It's higher than it was when President Trump was in office. So what's the problem?
It would be higher. But you're right. You're right. Look, most of the production's on private lands here, so that there's still room to grow production. We are at record high. We'll continue to set record highs probably for another couple decades. The question's the pace at which U.S. production grows, and how does that compare to growth in global oil demand, which is a little 1 to 1.5 million barrels a day. During the boom years of the shale revolution, the U.S. production were growing as fast as global demand. That really keeps oil prices down. If U.S. oil production goes much slower than global oil demand, so other countries have to meet those incremental barrels, that's an upward push on prices. Good for our industry, but not necessarily great for the country.
Where are we as an industry in terms of the fracking evolution, if you will? Because it was such an amazing story to turn this country from a net importer to a net exporter. Where are we in that process?
I would say midstream, mid-innings. There's still a lot of technology improvement going on, but the low-hanging fruit in the first couple decades, most of that's been picked. So the rise in productivity is much slower these days. We're still getting better at making each well better, but of course you drill the best locations first. The rocks and oil, that give up oil and gas the easiest, most of those have been drilled. So we're drilling slightly lower quality rock, and we're trying to offset that by improving fracking technology. For many years, fracking technology outleaped the decline in rock quality. Now you're seeing a slight decline in the productivity of each well because that degradation in rock quality is running a little faster than technology. But, not a huge change. A lot of room to run for U.S. production.
So, Chris, if President Trump gets in the White House and he opens up all federal land to drilling, really sort of opens up things in Alaska, etc., if that really invites more production, then won't the oil price fall even more, which then doesn't that hurt the break even? So there's got to be some kind of middle ground.
Exactly. Look, the markets always find a balance. But there's no question, a Trump administration would make it easier to produce U.S. oil and gas. So our production would grow. You'd see some offsetting factors, though. We'd see faster permitting on LNG export terminals. So the U.S. exports of natural gas would grow. I think you'd likely also see more industry relocated in the United States. Like, our natural gas resources in this country are just awesome. But yet most of the energy intensive manufacturing, think steel and cement and solar panels, that's done in China, and that's powered by coal. If you brought more of that industry back to the U.S., it would be powered by U.S. natural gas. You'd see lower air pollutant, lower greenhouse gas emissions, and more American jobs. So the Trump administration would certainly lead to more growth in U.S. oil and natural gas production, but it might also lead to more consumption, more domestic consumption of those products as well.
Chris, I'm looking at your balance sheet here. I'm not an industry analyst for energy. It looks really conservative to me. $460, $70 billion of total debt. You got $1 billion of EBITDA, free cash flow positive. What do you do with that kind of dry powder, if you will?
Are you investment banker pitching him right now?
I am, because I'm thinking about I could do a lot of stuff with this balance sheet.
So, Chris, just so you know, Paul is a former investment banker for media. So, just set you up there.
I appreciate that, Paul. But yeah, we always keep a conservative balance sheet because, look, our industry is very cyclical. We've had 2 violent downturns that have both been opportunities for us to buy distressed but good companies at cheap prices. So we're always ready for a downturn to be aggressive. And also, you're seeing a degradation in the U.S. electricity market. Electricity is becoming more expensive and less reliable. That's very unfortunate for our country, another one of those bad energy policies. But it's an opportunity for Liberty to start selling electricity into the grid. We power our frac fleets, burning natural gas to generate electricity to power frac fleets. We can take that same electricity and sell it to data centers or towns that are struggling with an unstable grid. So I think you're going to see a broadening of the shoulders of Liberty's business, and we're going to deploy a lot of our excess cash flow into a new business line, and we'll continue to buy back our stock, of course. We still trade at a single-digit price-to-earnings ratio.
Chris, that's actually tremendously interesting because sort of the conversation that was emerging at CERAWeek this last year was, do energy companies need to rethink the kind of company that they are? That they can't just be a straight up oil and gas producer. Do they have to sort of become power providers? And that's a different business. It's a different outlook. It's kind of rethinking the structure of what a business looks like. It sounds like you are deeper in those conversations than maybe some of your peers. Would that be true?
Yes, look, I think most will not, and most should not. Oil and gas is at an all-time record high market share for U.S. consumption. This sort of fears that oil and gas is going to be gone or demand will be gone in 20 or 30 years are just nonsense. So I don't think it's a necessary thing. But in our company, Liberty, we developed power production technologies, the highest thermal efficiency, meaning most of the energy from burning natural gas turns into electricity on the planet. So we have these mobile power plants we're using in the industry. We already developed that technology. Of course, we're going to go ahead and deploy it outside of the oil and gas industry.
Chris, do you have any appetite for being an acquirer of assets at this point?
Well, I would say we're mid-cycle, maybe a little below mid-cycle. We look at stuff all the time, but we only, we're mostly an organic builder. We only buy stuff if it's compelling. But, a different technology, a different business that maybe leveraged us faster into where we want to go, sure, we're open to that. We're always looking at opportunities.
And would that be in sort of the oil space to ramp up current positions? Would it be more to acquire some new technology, since we already talked about how current wells, not tapped out, but they're nearing that top out cycle? Would it be more natural gas? Would it be infrastructure? Would it be power?
Power is certainly a possibility. We're going that direction anyway. Might we buy a smaller player to speed that entry? That's a real possibility. Technology is something we always look at. We frack 20% of all the wells drilled in the U.S. and Canada. So, we're not really going to acquire to get market share. We're already the biggest, and I would say by a fair margin, the highest ranked quality provider in our space. So probably not in our core business, but certainly in peripheral businesses is possible.